Hello guys, hope you can hear me and see me. I'll wait for the confirmation in the chat, and Ken should be joining us any minute. Yeah, hello. Perfect, thank you for confirmation. 2 minutes top. Ken is joining us very soon. Yeah, actually right now. Okay, perfect. So let's invite Ken and let's dive in.
Hey Jake.
Hello Ken.
How are you?
Not bad. How about you?
Good. Yeah, I'm well,
Perfect.
man. I'm well, thank you very much.
Great to hear. Okay,
Cool.
let me just set up. Okay, let me notify this cool community, Telegram community, that we are rolling
Awesome.
and we can dive in.
Wicked.
Hello, guys. Perfect. Yeah, a lot of people in the chat actually today.
Nice.
Chatanya, hello. I hope I pronounce your name correctly because I'm trying for past few live streams, and I hope Chatanya, yeah, and I hope I'm right. Okay. To give us just last minute, guys, and we're good to go. Okay, perfect. By the way, guys, kinda surprised by the last results from the last Monday's giveaway. I think we gave away about 14 to 15 evaluations, and actually 5 people passed, which is a third.
Wow.
I was very surprised by that. I think previously it was about 20-30% pass rate, and the last one was 1/3. I'll probably bring up some of the best traders, and I'll also check if some of them already get some payouts.
It's the stream effect. It's the powerful effect of the Jake and Ken streams.
I would love it. Yeah, I would love if that be the case. Okay. Yeah, I'll explain once again the giveaway throughout the live stream. I'll just wait till everybody joins in, so I know how many people are here, and I'll just probably then jump in. Okay. So, you ready, Ken? Shall we start, or
yeah,
shall we give it a go? Okay.
To rock and roll.
What are we going to talk about today? I think RBA, right? Central Bank of New Zealand, maybe.
Yeah, I mean that's probably. I mean, it's a major event. I guess I'm expecting a bit of volatility there, and I know you like your Aussie pair.
Oh yeah.
So it'd be interesting to hear your thoughts.
Sure. I was definitely going to provide some overview. Okay. So Discord is almost done. Can you still hear my keyboard that bad?
Yeah. Oh. It's all right though. Good. I don't think people are bothered by it, are they?
Okay.
I think we're all good, man.
Okay, perfect. So I'll probably just pass the mic to you, and I'll just quickly bring up then a few traders who passed last week. And whenever I hear something that I've also analyzed, then I'll just jump in.
Wicked. All right, guys, let me share my screen. Share. Happy Monday, by the way, traders. Don't know about you guys, but I do always look forward to markets getting back open and in motion. Share. Okay. Bam. Screen. Here we go. Entire screen. Alrighty. Minimize this. Okay, guys. All right. let's start off with the most recent developments in the market. Okay. I think we noted in our last stream that we're going to be keeping an eye on Trump tariffs. Now, there was some good news. Remember how we've got this deadline? Okay, so I'm just gonna refresh your memory. Okay, just so you can just sort of visualize. Let me just get up. I just want to get up SPX stocks because we sort of saw a real true reflection of sort of markets panicking. So you remember this downside for SPX and NASDAQ and Dow Jones, okay, here in sort of March, April time, well, more so really dumping in April. That was because remember Trump had noted all those tariffs that are coming into play after Liberation Day. Now it's in all these tariffs attacking everybody, and he's basically just scaremongering. But I mean, he was serious because these tariffs were coming into play. But he's scaremongering to try and get better deals for the United States, right, with trade. Okay, it's very important you stay with me because it's a key talking point that we're going to be talking about for the whole of 2025. So stocks came under pressure initially then. But then if you look, stocks obviously aggressively bounced April, in the second week of April, because Trump said, look, we're going to give you guys a chance, basically. He's just showing how he's in control. Essentially, he says, we're going to give you guys a chance and you're going to have some time to work out a better deal. So we're going with a 90-day pause to the tariffs that I've noted where, the tariffs were aggressive, okay? So markets were happy, stocks rallied, all right? Now, there was a little bit of uncertainty heading into this week because we had this deadline of 9th of July, okay? So we had this deadline 9th of July, which you heard me speak about in our last stream on Wednesday, but that's now changed. Trump's allowing for August, okay? So he's giving people up until August the 1st. If you don't agree a good deal with the United States, you're going to have high tariffs. So he's just threatening tariffs on everybody right now, again, just like to try and get a deal. He says he's going to impose 25% tariffs on Japan. That will hurt Japan because Japan's massive in terms of their exporting of cars, a lot of Japanese goods, Sony, there's a lot of Japanese electronics as well. So, but the fact that Trump said we will give you, rather than July the 9th or 8th or 9th, when everything kicks in, I'm going to allow you till the 1st of August. So markets are happy with that. Now, when I say markets, I'm specifically looking at the dollar at the moment, okay? Because remember all of this, the dollar was hit, all this tariff stuff. Look here, the dollar had been hit and all this uncertainty, all this exerted the move to the downside for the dollar and kept us in this structure where we were printing these lower highs, lower lows. And you're probably sick of me talking about that, but remember the structure's our friend, trend is our friend, and macros help keep structure in place or force a breakout of structure to create another one. And right now, as I said to you guys last week, didn't I? Let's keep an eye on the dollar. Reason I'm interested in this because I want to see if we're going to get this again, this new lower high. Because when I look at the monthly, I know I just look at the daily there, but when I look at the monthly, again, I did say on Wednesday, the fact that we've taken out last month's lows of June, excuse me, the dollar does have every right to potentially come all the way back and maybe stage a reversal candlestick, right? Depending on how things go. But if I trade what I see, I'm sort of sitting on the fence at the moment and waiting to see how the price responds, to this potential lower high area, okay? If you remember rightly before, I said to you guys, remember this was a fake out, okay? We had a bit of a fake out there and then sucked back below and respected trend line, okay, and respected structure. So let's watch this again now. This is very, very important because if we do break through and we hold above and it doesn't prove to be a fake out like this, right? Then this is a potential dollar recovery, all right? I think I'm going to, look, guys, remember I had the crown. I'll call it a crown. I had the crown on for a while of calling the dollar downside, okay? My dollar bear crown, I'm just putting it to the side for now, okay? I'm sitting on the fence because I feel like we've had a big move to the downside. So I'm just sitting on the fence for the moment. And then maybe I'll put on my bull hat. We will see. All right. We will see depending on what happens. I trade what I see. And depending on obviously developments, that may change. Fundamentals change, right? But obviously we are still to the downside until something changes. So let's keep an eye on that. Okay. With that being said, I'm just going to go over to Euro. I'm not trading this right now, but I'm watching it. Okay. I'm watching it because obviously structure on the flip side to the Dixie, we've been printing higher highs, higher lows. So you can see we're grinding down 117 now. grinding that key demand area down, and we're likely to if this gives way today, if this holds, we're probably going to be slipping down in towards 116. Okay, but that, guys, would still be a new higher low. Okay, it'd still be higher low. So let's keep an eye. But that's the next major area of support for euro. Obviously, we're down 75 pips on the day, but this retest would make sense as well because it's kind of the highs here, there or thereabouts, and obviously more so last month of June. Okay, so that's on the watch list. So I'm very much fence sitting at the moment with euro and sort of dollar. Okay, I will go over what I'm sort of active in and interested in right now, and we'll talk about the fundamentals around those. I'm going to jump over to gold because I know you guys love gold. Okay, so let's just quickly take a look. Actually, before I go into gold, Jake, do you have any thoughts on the dollar?
Yeah, sorry, I was muted. On dollar?
Yeah, and dollar or euro at the moment, like specifically Dixie or euro dollar.
I was trading dollar today on GU, took the long,
Okay.
and kind of, closed it in profit, actually. But probably the only thing that I'll be looking for are some dollar weaknesses, because I still don't want to trade it towards the upside. I'm not dollar bull right now, as we have still long-term downtrend on it. So if I'll be looking for dollar, I'm still seeing some weaknesses till we break the trend line that you had on Dixie. Or we'll get like five days in a row or 4 days in a row bullish on dollar, then I might change my overview of dollar. But so far, I'm still kind of bearish, but not in swing trading, mostly in day trading or some minor scalping. Yeah, I'll probably do the same what you do, which is wait and see what the fundamentals brings us.
Yeah, cool, fine.
I'll then probably provide you just overview on GU and EU, but once you get there, I don't know if you're going to analyze actually Euro USD and GBP USD.
Actually, go on.
Are you going to?
So I just gave my thoughts on Euro USD.
Oh yeah, okay. So let me share the screen then, and I'll provide some overview as well. So okay, sharing the screen, and for some reason loading too long. Okay, let me know when you can see my screen.
Yep, all good.
Okay, so on GU, basically, I'm still kind of believe that 1.36 to 1.358, this zone can hold, and in case not, we still have the trend line from higher time frames. So yeah, that's pretty bullish trend line on this one. At the same time, I'm hoping that today I'll see, at least on a daily, pushback and big shadow on today's candle. If so, I've actually traded today that I shared about 30 pips from 136. Hopefully I closed, so I didn't get the break even though I told you guys to put it on break even whenever you have 20-30 pips in profit, because then you risk free. But still, I would be pretty open to it. Depends on what this week brings us, as we have on Friday GDP, if I'm not mistaken, from the UK.
Yes,
so
that's correct.
Yeah, we'll see about that. I think on Wednesday we have FOMC readings. So yeah, we'll see about those two. But as for the technicals, if we still push a little bit higher on the daily candle and we create shadow like this one, I might be still open to go on GU longs, at least throughout the day, like collecting 20-30 pips. That would be probably my idea. Still don't want to trade it toward the downside, because the sentiment, as I checked last week, we were talking about it, the sentiment was about 70% retail traders were short. Where retail traders are short, I want to be long. Yes. Today it was like 63-64%, so it's still majority going short, and big institutions are still long. So to me, it's still a bullish market till that changes, at least till we don't break this trend line. I'm pretty bullish. Depends on fundamentals on dollar, right? The tariffs. At the same time, the Euro USD, if we actually manage to get closer to 1.3 16.5. That's probably what I would think about some intraday longs. Yeah, so pretty much similar as the GU. Those are basically my ideas. I wouldn't be trading, even though I swing trader, I wouldn't be trading any swing trades at this time because dollar gained the momentum after weekend, bullish momentum. So it's kind of risky to go for some long-term trades. Yeah, so that's basically just my technical perspective on the EU and GU, because fundamentally we need to wait for more data.
Agreed. Yeah, totally aligned with you, man. Totally aligned.
Perfect.
Yeah, definitely.
I'm going to give the screen back to you. And
okay.
yeah.
All right.
Stop sharing. Perfect.
Okay. Cool. Share. All right, guys. I'm just going to jump over to gold because I'm active in gold at the moment. Someone commented, and I just want to explain something just from an educational perspective. Let me just get the comment up. Someone said, what's the comment? So they said, if dollar rises, gold falls. Now, typically speaking, you are somewhat correct, okay? Because obviously gold is a dollar denominated asset. So it's priced in dollars. So obviously, if the dollar rises, typically speaking, gold should fall. If dollar falls, gold should rise, okay? However, there are cases like when both dollar and gold could rise, okay? Obviously, dollar's having its own technical correction right now, but there are still fundamentals that support gold buying at the present, okay? Because look, yes, markets are somewhat hopeful about these tariffs, but they're still going to be hedging against that risk. They still know what Trump's like, and they still know what's happened in the past before where this doesn't go away. So there's still that uncertainty. We're still heading to a period we're still heading through a period, especially in the United States, where we have stagflation. We're still heading towards an economic downturn, okay? And people still buying gold. Like when you look at the data here, let me just show you something. Okay, hopefully this might be quite small on your screen, but basically, I'm just been reading some sort of latest gold commentary, and look at China's gold reserves. Okay, China are still increasing their gold reserves. You can see here in the latest reading, 73.90 million fine troy per ounce at the end of June. So it's slightly increased. So they're still buying. Their gold reserves are increasing. The gold purchases are still increasing. And then there was a report. Okay, if you look down here. Okay, there was a survey by UBS. So anyone that doesn't know UBS, they're credible. It's a major Swiss institutional bank, right? So their survey says 65% of central bank reserve managers sorry, that's not the headline I want to read. 39% plan to increase their gold reserves they hold domestically, up from 15% in 2024. So that's over double, okay? So yeah, look, 29% of reserve managers have or plan to reduce overexposure to US assets. Interestingly, gold, euro, renminbi seeing benefit. Yeah. So you see what I said to you guys before, right? About reducing their exposure to US assets because of all this uncertainty, right? Remember I told you about all that capital flow that's left the United States. Well, it's still existent because in this survey, UBS, they're noting that they have a plan to reduce their exposure to dollar assets. And obviously gold, euro, and renminbi, that's the Chinese currency, are seen benefiting from that. So there's still a lot of supporting factors for gold right now, okay? A lot of solid factors, which is why I expect the dips to continue to be bought. Now, I adjusted obviously our trend line here, obviously structure is still to the upside, right? Where we've been printing these high highs, high lows, but we've just been in this sort of lull period, a bit of consolidation at present. Yeah, we're still stuck in that consolidation, but we've got prospects to break out at the moment. Today, again, I just adjusted this trend line basically here, but you can see it's a valid one. Tap, 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 tap. I'm not Tory trades, but I do at times, mark up trend lines just for point of reference, when we've got nice clear structure. And you'll see obviously on the 4 hour today, we staged the rebound there or thereabouts, reversal doji, big bullish engulfing and push to the north. I want to show you why I entered this. And you guys know I do talk about liquidity sweeps quite a lot. And we had a liquidity sweep today this afternoon, just as New York was coming into play. Okay, we had a nice liquidity sweep below the Asian range low. And then I saw these reversal candlesticks here. And then I ended up getting in just ahead of this big bullish closure here on this 30-minute. And then took those longs because I thought as soon as we get that fake out, suck back within, this is going to fly at least towards. I have been clipping some partials on this, but I'm expecting that to come up to this, obviously the Asian range high, which is sort of the first target. All right. I will, once we're out there, once we hit that, I'll be sort of observing. All right. I'm just waiting because it's quite late in the day and waiting for some further buying. Now, when I look at gold, okay, obviously I've just told you all the supporting factors for it. When I look at gold here on the 4 hour, all right, and again, there's a few markings here, but you know, like my bull flags, it's got a bit of a flag here. This is the momentum, the pole, and this is obviously the consolidation. And now this is potential, the momentum of the breakout to the upside. All right. Now, last week, remember we were looking at longs. Okay. Once we got a breakout of this heavy area supply here, which, you know, we were looking at as a potential inverse head and shoulders. I know we're going patterns galore right now, but left shoulder, head, right shoulder, but we pinged in the wrong direction off that because of that non-farm payrolls on that Thursday. All right. But now we're buying those dips. It's just noise really. And how we're looking at, how I'm looking at this, excuse me, is, you know, this sort of bottoming out here, like a double bottom, and then looking to come up to this neckline area and hopefully challenge this area again and run clear. The fact that we're magnetized and we're coming back up to this so soon, right, after this rejection here, I think this is like knocking on the door. The bulls are knocking and looking for a breakout. Okay. So I'm gold long, and I like the gold longs for this week. And I think there is a decent chance, especially after staging a rebound last week with that bullish candle, I think there's a chance that we at least go and take out last week's highs. Okay. That's my estimation this week. Obviously, whether that happens or not, we'll see. But I expect 33.65 there or thereabouts, those highs to be taken out. Okay. And see a continuation. Because look at the structure, right? We printed a higher low, didn't we? So we can go, baby, and print a new higher high. Let's go. So yeah, fundamentals, technicals, still support that, baby. I don't know about your thoughts on that, Jake. Ken loves these channels. Yeah, I do. I mean, as I said to you guys, it's not like I'm trading channels, because the key thing for me, just so you know, is yes, I mark them up for point of reference. But you know, when I'm marking up these channels, I'm marking up, for instance, this being a pullback, right? Observing this pullback, but then I'm expecting, you know, during this pullback, obviously we're creating a structure, right? We're printing new lower highs, lower low, lower high, lower low. But I'm observing that price action. I'm expecting eventually for this near-term structure to break out and fall back in line with the higher time frame structure, right? So it's just, you know what it is? It's like a comfort thing. You know, where you've grown, like for so long, you know, I've had a way of trading, and just, it's like a bit of comfort. It's like, give me a hug, you know, while I'm trying to conduct this analysis to take this trade. Like, look after me, you know, just a bit of extra support and comfort. So that's why I mark them up, basically, just the extra confidence, you know, just to make sure I see where we're in line with the structure. Yeah, I don't know what your thoughts are, Jake, on that, on gold. Jake? Oh no, where's Jake gone?
Yeah, probably didn't hear me. I was talking, but no problem. So yeah, I'm also really bullish on gold. I wouldn't sell at all. For me, gold is like one of the commodities that you can just buy, hold, and eventually you'll get into profits. Actually not planning to trade any intraday gold, because I'm not really type of a guy who would profit on it. But as for buying it and holding it, I'm all for it. Actually, I'm looking for some, let's say, strategy or system that would work on gold on intraday, because what I'm planning to do this week is review of a trader who basically is just gold trader, and he purchased an account last week on Monday, traded scalping gold for 12 hours straight. So 12 hours straight, he was scalping gold, made $36,000. So passed the evaluation.
Scalping.
And then, scalping gold for 12 hours straight. And he made eventually like $36,000, but that was for passing the evaluation. And then from Tuesday to Friday, it was again scalping gold. And those were like trades, $3 move. So yeah, he was trading like $3 move and made, let's say, 3 grand on it. And then from Tuesday to Friday, he was again scalping gold and eventually get payout of, I think 15K, so $15,000. So yeah, in 1 week, with just scalping gold, he passed, and actually then at the very end of the Friday, made 15K. Yeah,
Nice.
That was
What time frame
really,
was
really
he
good
scalping?
trading. I bet he was either tick chart or 1 minute chart, because as I was saying, some of the trades were just $3 move on gold. So he was trading like $3 move. Yeah, but he made it. I mean, this trader was amazing. So I just want to put all the trades into charts, trying to figure out what worked for him. What if this system? I mean, it wasn't luck. He did like 60 trades on Monday on the gold.
And what was his win rate, just out of interest? Do you know the data?
90% win rate.
Wow.
Yeah.
Wow.
I was like completely I'm very curious about this trader. So yeah, it's going to be hell of a review. So yeah, and also on not only an evaluation where he had 90% win rate, but also on the simulated funded account where he had 85 or 84% win rate. So yeah, some sort of a system. It wasn't luck. That was crazy. Looking forward to dive deep into this trader. Just quickly remind the giveaway, because from the very start, before the live stream even started, people are asking about it. So basically how it works is that, I mean, most of you already heard it, but for those of you who are new here, we are basically given a 48-hour evaluation challenge for traders who are often participating in our live streams. And basically, whenever we have today 60 people watching, it's going to be another like 20 evaluations. And after the live streams ends, I usually include in the comment section the YouTube names of those people who get the evaluation. If you get the evaluation last time or the week previously, and there are people who are joining often, they will get it. But once we run out of the people, we're going to do it again. So don't worry. I mean, Chaitanya is here all the time, so he's probably be one of the first who will get it after we run out of people, run out of traders. Mm-hmm. Nevertheless, once you win and you see your name in comment section of the recording of the live stream session, go to EA Jake Instagram profile and send me a message, at the best screenshot of your profile, and I'll just chat to you. You'll send me your email address that you registered with at EA Markets. So actually you can do both. You can send me a screenshot of your profile and your email address. I'll just confirm it's you, and then I'm going to provide you with the evaluation. Once you get the evaluation, I'll confirm it in the message on Instagram, and you have 48 hours to pass. If you pass it, it's yours. You're already in simulated funded stage, so you can trade it, hopefully get some payouts. That's what I'm trying to right now figure out, if there were actually traders from the last week who passed this challenge who get some payouts. So we'll see about that. And yeah, I think that's it. Yeah. So that's about the challenge. And also one more thing, guys, because at the very end, again, we might be joined by our performance coach, JV. Maybe you saw some of the latest content on EA Markets YouTube channel. That's JV, our performance coach. So if you have anything that you struggle with right now in your trading journey, he's really great at what he does. So he can provide you with some tips. So if you had any questions about your trading discipline, anything regarding psychology, mindset, just leave the question in the chat and we'll eventually get back to it. So yeah, that's what I just wanted to add before we continue. I'll just briefly check if there were some question. Yeah, Chaitanya, JV might join today if we have questions from, like how do you avoid FOMO? That's a good question. So yeah, if we have questions like this, JV is going to join at the very end, and he's going to provide you with some practical insights, tips, how to deal with it. So looking forward to do that. Perfect. So we end up with gold, I think.
Yeah, we last finished on gold. Yeah, some people are asking for JPY pairs analysis. I'll get to that. I just want to quickly talk about AUD because we have the RBA rate decision overnight, and these guys are largely priced in that they're going to be cutting by 25 basis points. Okay, so typically when you would see weakness on a rate cut, if it was a surprise, you would see weakness, in the currency. But where it's baked in, the markets have fully priced this in. It's like 90-something% probability that they're going to do that. We shouldn't see AUD weakening on that. The weakness for AUD, if it comes today, overnight, would be on their outlook. Are they committing to more rate cuts? Okay, so if we just take a look, let's just quickly analyze AUD Australia sort of late. If we look at let's look at their GDP. Let's see where GDP is at. We're just going to build a quick picture. GDP is obviously slowing down quite a bit. We've seen a lot of missing of market expectations. We've only a quarter-on-quarter growth there of 0.2%. It's like really weak growth. Okay, almost at no growth, and obviously wouldn't be far off contraction there. So we had that data there from Australia. Okay, so GDP not great. Let's look at Australian retail sales. Okay, let's pull up retail sales. The last reading, I think it's bad from what I remember. Yeah, look at that. We've had quite a poor run of retail sales. Remember, for anyone that doesn't understand, retail sales is consumer spending. Okay, so it really gives us the health of the consumer, because obviously if a consumer's spending money, generally speaking, I know because a lot of people spend outside of their means, but generally speaking, consumers confident, consumers spending money, which is obviously good, contributes towards economic growth, because obviously retailers, businesses get sales, right? So this hasn't been great. So weak GDP, weak retail sales, consumer spending. Let's take a look at the labor market, because obviously the RBA they really focus on the labor market and inflation. Okay, so let's look at AU employment change, okay, and unemployment rate. I don't think it's okay. All right. So the last reading, we had a loss of jobs of 2.5K. All right. It's been a bit hit and miss. What I'm interested in, see where the unemployment rate is at. From what I remember, I think the unemployment rate is still fairly steady. Okay, at 4.1%. Am I right? Yeah, 4.1%. So the the unemployment rate is still relatively low, which the RBA will probably acknowledge the fact that the labor market hasn't fully deteriorated yet, and they have a dual mandate of keeping labor market stable and also inflation. So labor market's still relatively stable. Let's see where CPI is at, because obviously if CPI is low, it gives the RBA room to cut rates, right? And further rate cuts. So if we look on an annualized basis, it's back to their target. We know it's back to their target range. It's at the lower part. They have a range of 2 to 3% or 2. Sorry, I might be wrong. It's either 2 to 3% or 2.2 to 2.5. But the fact of the matter is, it's at the lower end anyway. Okay. So the fact that we're at the lower end of where they want inflation means they have room to cut rates. Okay. Because otherwise there's the risk that inflation continues to fall. Okay. Remember, we cut rates to boost economic output, to boost spending, to boost growth. Okay. We lower in people's costs. So with everything that I've noted, I would lean towards more the fact that they should be dovish. Okay. They should be dovish, but it's just whether they're going to commit to another rate cut. Now, there's a lot of uncertainty with the tariff still. Okay. We still don't know that. So what they may do is this could be a non-event, and they say, look, yes, we're cutting rates now by 25 basis points. What's going on here? Wait, was this just now? EU will not be receiving letter setting out higher tariffs from the United States. Okay. Okay, it's just trade letter. This is not really a big deal, but anyway. Sorry, back to the RBA. So I think they're going to cut rates. I'm just not sure. I would lean toward, me personally, I would lean towards it being dovish and AUD negative. But I know what the RBA are like. The Governor Bullock, okay, Sandra Bullock, her name is. Okay, Sandra Bullock. Let me just quickly see. It's good to put a face to a name, isn't it? Sandra. Oh, Michelle. Sorry, Michelle Bullock. Sorry, guys, stay with me. Yeah, this lady here. She is actually quite hawkish. I don't think the RBA, like, she likes to keep rates higher. She moves slowly when it comes to moving on a dovish level. So I will be quite surprised if she does. you know, say we're going to be cutting again, we're going to be leaving the door open to another cut, you know, like imminently. I just don't think. I think AUD could strengthen basically on this decision. If I'm leaning with rational, with historic, sorry, of what she's like. Okay, rational aside, if I'm leading with historics and what this lady's like, she's quite hawkish. I think that it won't be as dovish as what the markets want, and AUD will strengthen initially. Okay, but that would be good for me because I'm looking at Euro Aussie longs. Okay, I like Euro Aussie longs. I said to you guys this before. Structure's very bullish, isn't it? High highs, high lows, high high, high low, high high. And now we're just consolidating. We broke through finally this heavy area of resistance. See, it's 79.80, finally broke through. And now we're getting a pullback and potential retest on this former supply area and obviously potentially new demand. So this would fall quite nicely for me. Okay. So if we do get the RBA cutting rates, but they're not as dovish as what the markets would expect, then this can, AUD can strengthen and fall in here. Okay. But then markets be like, you know, when you weigh up fundamentals between Euro and Australia, Euro is still the safe haven. Euro is still the most stable economy in comparison to Aussie. So I think any pullback will just be noise. And then that'll just print a new, obviously higher low. And then we'll carry on to the upside. Okay. So I'm watching that. Jake, were you going to say something? Sorry, go ahead.
No. I totally agree with you. I think that we might get some bullish momentum on Australian dollar, but I don't think that it will last for long. Australian dollar or Australia still economically with a strength kind of low compared to Europe. So I think that Euro Australian dollar will continue further. And if we get the bullish momentum on Australian dollar, it would be a great opportunity for me to re-enter on Euro Australian dollar. On the other hand, I'm pretty worried because I think the retail sales were poor, so inflation will be pretty much under control. And in that regard, also the GDP is not doing that well as they anticipated, if I'm not mistaken. So might actually be one of the first dovish tones if actually we get from blocks, but who knows? So yeah, but if you're going to trade Australian dollar, I would wait for the press conference, because if it's going to be negative for Australian dollar, you can then enter anytime. But if it's going to be actually bullish for Australian dollar, then we get really good entries on Euro Australian dollar. So we're going, nevertheless, we're going to have one more session on Wednesday, and on that very session we are probably provide you with more, because the RBA is tomorrow, is it right?
Yeah, tomorrow AM.
Yeah. So I'll either record another story, because I really enjoy trading Euro Australian dollar. Nevertheless, how did I trade it? Entering on 175, we are right now at 180, and I took poor 80 pips from the trade. So I'll be most definitely traded. So if I'm going to enter the trade, I'll let you know on my Instagram story. But as for Euro Australian dollar, I'm still bullish. I don't see many reasons why would I even consider selling.
Yeah, man. Awesome.
I'm looking for if I have any other currency pair with Australian dollar. I think we analyzed the Australian dollar Swiss franc, if I'm not mistaken. Let me just briefly take a look.
By the way, Jake,
yeah,
Titania is asking to share your setup
on Australian dollar, on Euro Australian dollar.
Yeah.
Okay, let me do that.
Yes, Jake, please share your setup.
Yeah, sure. Okay, share the screen. Tally. Okay, Euro Australian dollar is right here. Yeah, so basically we had 180. Actually, that wasn't bad entry point, the 180. Getting the pullback towards breaking, getting the pullback, and then continuing on a bullish trend. But I'm kind of afraid of RBA decisions, so I would most definitely wait for it. But then if we are actually going to get the bullish momentum on Australian dollar, I think we can head somewhere to 179.5, maybe. because we've got a lot of bounces here, so it's also important level 179.5. So yeah, if we're going to get bullish AUD, I would probably guess we're going to, where's the brush? Where is the brush? Yeah, here, okay, light. I think we might end up somewhere here, but then I'm pretty sure we're going to reverse. In case that we are going to get bearish momentum on Australian dollar, I think 1.82 at least we are hitting, and that's basically the pair when I was actually buying on 175 down here, and I was pretty confident we're going to hit 1.8, which we did. So at this moment, I'm pretty confident that in upcoming weeks we are going to hit 1.82 if the press conference is not going to be too hawkish, if the blogs is not going to be too hawkish. But I'll most definitely let you know tomorrow morning, because the RBA is a few hours after midnight. So yeah, tomorrow with London session, I'm going to record a story. How do I see it if this setup stands? But can they see my screen even? I'm not sure. Let me check.
They can see. Yeah, we can see it.
Yeah. Okay. Perfect. So yeah, that's the idea. So I'll just confirm if so, and if actually we get dovish RBA, then I'll probably just enter the longs tomorrow morning London session, because euro, fundamentally speaking, is still strong. Also, sentiment for euro heavily strong on institution part, and for some reason, majority of retail traders are trying to sell. Like, that's the most common mistake of every trader, trying to sell at the top, but market is too bullish. Never go against the trend. So yeah, I'd be still bullish here. And I also was watching the Australian dollar Swiss franc, which is still looks kind of, because Swiss franc is my second probably most favorite currency. And if you take a look at the Swiss franc index, which we can take a look anyway, so Swiss franc index is this one. Yeah, so that's like, I mean, that's a S&P index, or those are stock indexes. A Swiss franc is just, just going up. There are a few corrections, but if you want to, and I'll probably say it more often, but if you want to buy a currency and you see some vulnerable currency, some weak currency, yeah, go with Swiss franc. So Australian dollar, Swiss franc is also a really good option. We are right now, let me take a look at lower time frames. Actually, it would be also a good enter at this point, 0.519, 0.52. This one would be good, and I think on AUD Swiss franc, I'm pretty sure we hit already 0.5. Let me quickly check. Yeah, we did. So yeah, we are far from it. I mean, how far we are? We are about 200 pips, but in upcoming weeks, as we most likely go on euro Australian dollar towards the 1.82, then I'm pretty confident that on Australian dollar Swiss franc will go to 0.5 at the very bottom here, creating new lower low. So yeah, that's Australian dollar, at least for me.
Nice.
Let me take a look at the chat if there's something. Yeah, Australian dollar Swiss franc bearish. Don't swing against the trend. Yeah, that's true. Yeah, okay, perfect. Also, Japanese yen. Do you have any insights on Japanese yen, Ken?
Yeah, I mean, yeah, I think, obviously JPY is getting smashed today. For anyone who doesn't know, it was just that optimism that I said with regards to Trump allowing more time for people to negotiate a deal. So obviously, remember, yen's a safe haven. Yen's obviously still been getting smashed anyway when you look at some pairs like EJ, GJ, and obviously UJ, see with this dollar rebound. But because obviously the BOJ, as we know, we keep saying it, but they're just not going to be hiking anytime soon. I think we need to keep an eye. If you look at Forex Factory this week, it's not, let me just pull it up here, JPY. I believe we have some sort of wage data, which BOJ will be watching, even though they're not really overly going to, today. Aha. Okay, interesting. So yeah, overnight we had the average cash earnings. It's not like a, should I just share my screen quickly? I'm not sharing, sorry. Let me share screen. Okay. This one. Yeah, so guys, this is not, it should be, but it's not like a major data release. It obviously with wages, it tells us wages. The BOJ, one of the reasons they started hiking rates is because people's wages went up. Because remember, if wages are higher, typically speaking, people are going to be spending money, right? And they're going to be spending money and keeping price of goods and services, inflation in check. So the BOJ can hike rates. But this has dropped down to 1% on an annualized level. That's a big drop from 2% previous. The previous was rise lower from 2.3 to 2%. Okay. Forecast was 2.4%. So that's a big drop. So the BOJ will most likely be thinking that. And this is probably one of the reasons, well, why JPY has been smashed to pieces, because this has definitely put, the rate hike is 100% not coming this year now, especially with obviously the tariff uncertainty. This would probably be like 2026. So that's one of the reasons why JPY is getting beaten to a bloody pulp. I said to you guys last week, I haven't been trading EJ, but it's so clean. You know, it's just been, all it does is move higher. And understandably, because Euro fundamentals are a little bit more sound. And really, when you look at this, it's just, as I say, it's one directional. You can see where we're going. If we go on the higher time frame, where that next major area is, you know, you've got a couple mid 172 region, but then ultimately up here at 74, you know, these are big heights. GJ, I'm still aboard with GJ, right? I'm watching GJ because we're about to print a new high, right? I missed this. This was on my watch list, but because obviously it was last Thursday, I wanted to trade this, but because obviously last Thursday was heading into that long weekend, you know, not thanks, I was going to say Thanksgiving, the 4th of July. I didn't bother trading this, but I liked it. I really liked it, but the volume, I just thought it wasn't worth trading on NFP day. But you see, obviously, again, trend line structure, high highs, high lows. I was watching down here where we formed the reversal candlesticks, these little bad boys, and then big bullish engulfing. And then, yeah, just thought this was going to run clear again. And it has. So where is this going? We're coming up to 99s again, right? This supply area. And we're knocking on the door. And you'd expect this once it finally pushes through, we're probably going to get quite a surge because there'll be a number of stops placed here. And we'll get stops being triggered to the upside. Okay. Break, retest, I expect. And then just a run. This could just run in towards sort of 206. Yeah. That's what I believe. So upside for a lot more so EJ and GJ. All right. UJ is running higher near term, but still within this consolidation. We're just still moving in a range. Okay. Because obviously the dollar fundamentals haven't been so bullish still. All right. Obviously keep an eye on this gap area here. Okay, we still might want to go and fill, go and get a body of closure above, but then proof, and this could end up faking out, and then we suck back within this range. I see sort of price action like that time and time again. So we get a bullish candlestick to close this gap here, right? And then the following week, we just fake out, and then we get back in this range again, subject to breaking out to the downside. That's a likely scenario I think will happen, but let's see. I don't think this dollar strength is here to stay anyway. So yeah, upside EJ, upside GJ, caution with this dollar yen, near term upside yet, but vulnerable to further downside pressure on a weaker dollar, in my opinion. So that's my thoughts on JPY.
Okay, yeah. I wanted to stop here for a second because I saw 2 questions from Nelson. Where is a good place to start for someone to start to learn macroeconomics? And also someone asked, is there anywhere on the 8 sides or live streams to fundamental education? Do you have any tips for people who would like to get into fundamentals? Where should they start with? I mean, I've got one book. I don't know if you have ever, I can share my screen. I've got one really good book, guys, that I would maybe recommend to you. Not pay for it, but just one book that I really love. And it's called Economics with a X at the very end. Let me just bring the tab here. Okay, cancel, share the screen. share, and it should be this book. I don't know if you can see my screen. If you can confirm that very quickly. Okay, perfect. So it's this book. I don't know. Have you ever seen this book?
No, I haven't.
Yes.
Economics.
Yeah, but basically it's like a comic book, but it's really valuable. I mean, the informations in it are actually, if you don't know much about how economy works, I would most definitely recommend this one. It's one of my favorite books. It's also fun to read. So if you're not a big fan of reading, which I'm not also, but this book keeps you entertained at the same time. You will learn how the economy works. It's basically from the, early 18th century with Adam Smith till the modern age. And basically it provides you with the throughout the history how economy was formed and how it works. I'm pretty surprised you haven't heard of it, but yeah, there's a lot of books. So I don't know if this one is even like famous in the UK, but most definitely I would start with this one. Then also you've got a lot of videos on YouTube, a lot of articles on the internet. But if you're really beginner, if you don't know nothing about economics, this will explain the GDP, the inflation, the interest rate, how it works, how banks were formed. I mean, really, really a good book.
Nice.
Where would you?
Yeah, no.
Where would you advise people to start with? If someone would approach you, ask you, I would like to get into fundamental analysis, like macroeconomics. What would you advise them to do?
Well, do you know what? It's a good point, because I think you need to understand the key, as this book clearly covers, is need to understand first of all how the economy works. What makes up the economy, all the contributing factors to an economy. Because I was just going to say, I would suggest people just start reading these little summary pieces that are written on Reuters, that are written on Bloomberg, written in CNBC, and just understand what's being spoken about in the economy at the moment. And anything that you don't understand, previously I would use Investopedia. So the Investopedia is great. It explains a lot of terminology. But now obviously ChatGPT exists, so you could sort of bypass that. I still like Investopedia though. But yeah, man, this seems like a good book. So give it a try. Give it a try.
Yeah, whenever you have a free time, I would even recommend it to you. I think you'll enjoy it. Most of the information from that you'll most likely know, or most likely knew already. But it's also good to learn, like, from the history how it was formed. I mean, the very beginnings of modern economy. So
yeah.
And for those of you guys who like to read comic books, superheroes, whatever, then this is a comic book and the informations in there are legit. So yeah, Michael Goodwin, Economics.
Yeah.
Also, yeah, you need to, before you start basically analyzing markets with fundamental analysis, you need to know what are those economic indicators, how they work, and how they are connected, because the interest rate are connected, and I would say probably it's like patterns. Then you, as well as technical trader, is analyzing patterns. You do the same with fundamental analysis. The most common example is whenever there's a high inflation, you could anticipate that central bank is going to hike the interest rate, and in that moment when there's a print of higher inflation, the market is already start to pricing, is already giving the strength to the currency, because the participant, the big players, are already expecting the bank to hike the rates. So yeah, you need to know the indicators, how they are linked, and what are the patterns, and then basically you can get from it. Also, yeah, I can suggest that ChatGPT, you can basically now trick AI. I'm using it on a daily basis as well, but you can trick AI to be your mentor, your coach. And basically you don't need to expend a lot of money if you don't want to invest into it on some courses. You can also do it free now with AI. So yeah, give it a go.
Yeah,
that's probably awesome. The best way to start. Do you have anything
Quickly,
else that you would like to?
I'm ready to round off, but I just wanted to give people just a few resources quickly, just take 2 minutes max. So yeah, guys, someone asked, where do I look to keep up to date with, things at the market? So this is one source, Reuters.com. Check that out. Obviously, I'm sure you've heard of CNBC. Read their Markets Insider section. They write nice little summaries of what's been going on in the market, the key talking points. Okay, so read these little summary pieces. Check out actionforex.com. These guys have good contributors that contribute. Sometimes you get banks contributing there in the fundamental analysis section, so you can get your view. Look, you got KBC Bank there, Asian Bank, Swiss Quote Bank, Danske Bank, RBC Financial Group. So you get some good contributors here. Check that. Check out ING Group as well, ING Bank. These guys write some really nice research pieces. So you can check out here, go on ing.com. And then, yeah, these guys put some nice press releases out just about Forex markets, about markets in general. Investopedia, as I just said to you guys already. Trading economics. Okay. So you see all these little summary pieces of what's going on in the markets. Read. Forex Live is great as well. These guys are good friends with some of these guys here. So you can check out these guys. They write nice little pieces as well. And that's it. There's plenty there. Yeah. There's plenty. And obviously you can check out one more, which is FX Street, fxstreet.com. Okay, it's another one there. So a few resources to just sort of tuck into with news flow. All right.
Yeah, I'll probably put them all in the description, guys. If you didn't catch that, I'll include all of the sources that Ken just mentioned in the description of the video, or maybe in the comment section. Yeah. Okay, perfect. Awesome. Do you use Forex Factory? Me personally not, but I think you do, Ken, right?
Yeah, I get up just because it's friendly for everybody. But typically speaking, I'll use another source. Trading economics is better, but it's just not as friendly to the eye in terms of like its own calendar and stuff. But otherwise, obviously, Forex Factory is there, but it doesn't show full data points sometimes. So I would lean towards using trading economics for anybody.
Okay, yeah. Perfect. So yeah, guys, awesome. before we go, I think Ken, you need to round up. I would invite, if you have any questions for JV, please leave them in the comments because he'll be joining us soon. We already had a few questions. I'm just going to send him the link. You can probably say goodbye to Ken if he needs to go. Yes, I do, guys. Pleasure. Hopefully I'll see you again soon. Well, yeah, of course I will. Are we doing this on Wednesday? Oh yeah. We do. Right, I think you free on Wednesday, right? Or yeah, all good. Yeah, perfect. So we'll then do it on Wednesday at this on the same time. Yeah. Okay. So thank you very much, Ken. See you, traders. I'll see you soon. See you Wednesday. Okay. So right now, guys, if you have any questions whatsoever, please place it into the live chat. I'll invite JV here in a second, and as he will be like giving the lessons, providing with the tips of the challenges that you are struggling with at this moment, whenever it's passing evolution. Someone suggested actually the FOMO, so probably JV can start with that. And as he is going to answer those questions, I'll already start working on the people who will today gain or get the challenge, the 48-hour evaluation. It was, as I was saying, it was 60 people here, so probably about 20 evaluations. We are going to do the 5K, but since the next live stream session on Monday, I think we have already some very similar faces that we saw, familiar faces that we saw for a couple of live streams already. And we are going to probably hype it to 10K. So we shall see how big positions you can. Hello, JV. How are you doing?
Hey, guys. Hold on. Let me. Good, man. Hold on.
Yeah, sure. Take your time. And yeah, I'm just reading the chat. And okay, do we have any questions about the giveaway? Who to contact if you win? If you win, just contact me on Instagram, EHA. I'll also leave the link in the description probably, or in the comment. But basically, I'll write down all the winners into the comment of the recording of this live stream, so you will then know if you won or not. Okay, perfect, JV. So I don't think I need to introduce you again, because most of the traders here already saw you on previous live stream session or on the latest yield markets content on YouTube. So just to brief, JV, our new performance coach at yield markets. And we have actually a lot of questions now. There were a few questions that I would like to return back to, but then we can probably continue with some of the new ones. So the question that was mentioned first in the chat was, if I'm not mistaken, about FOMO, wasn't it? Yeah, how do you avoid FOMO? Because this one was actually really good. So can we start with that?
Absolutely. Absolutely. Can you hear me well here?
Yeah, I can hear you perfectly.
Phenomenal. So guys, and I know FOMO, it's like a big one, right? Probably everybody's thinking about it all the time, and as traders, we're very familiar with this term. So I was thinking, when I was reading you guys your questions, I was thinking about breaking down first the word, right? Fear of missing out. And I was just making some notes on this thought here. And first of all, let's talk about fear. Of course, everybody knows what this is in trading. And when you're taking a decision, and when you're putting money at risk, and you're putting something in on the line, which is your account, even if it's $100 or $1,000 or 10,000, whatever amount it is, big for you, it doesn't matter. The fear, it's pervasive. It's always there, right? However, when we're talking about fear of missing something or not being able to participate in something, which is basically what we call the fear of missing out, I would probably start off with thinking about our language, right? So FOMO here, FOMO there, and we see it everywhere in social media and even in our lives. So even though we know what FOMO is, I would start off by taking it out of my language, right? My words. I don't actually use FOMO to myself when I'm doing my self-talk, when I'm doing my journaling here. Some of my journal notes here. And when you're writing things down with your pen and paper, it's different than when you're doing it in your computer. So when you're talking about FOMO and changing your language, basically you need to look a little bit deeper into what it really means for you, not for for people or out there in trading communities. FOMO is basically not being able to participate in a move or in something that looks like an opportunity for you, right? First, define if this FOMO thing that you're feeling is because somebody else is participating in a trade that you're not. If that is the case, just drop it. It was not your trade. It's like, you watch someone in the street and you see a guy holding another girl's or a girl's hand, her girlfriend or whatever, and you see, oh my God, I have FOMO. Bro, it's not your girl. Why would you have FOMO, right? I'm just making, an exaggerated example here just to make a point. But if you see someone taking a trade, right, and they're like 20, 30, 50, 100 pips in profit, and you miss the move, bro, that was not your trade. Why? Because it was not your plan. Simple as that. However, if there was a setup and you were holding, you were waiting for a specific setup, for a specific time or a specific window of opportunity to execute on a specific trade that you were, preparing and planning, and then you're unable to execute your trade because you're like second guessing yourself, and you're probably, I was considering going long, but probably I'm wrong. I should be going short instead, because these guys are talking about shorts and the dollar is going up and this thing should go down, and then you start like flooding yourself with all of this self-talk and second guessing yourself, and then you're realizing at the moment, when all this chatter inside this monkey mind going on in your mind, you realize that you're missing out, that you're not participating in something, right? And also part of yourself is also realizing that the more you wait, the riskier it becomes. And this is one of the types of concepts that we're going to be diving deep, like really deep into the program. Like, what type of trader you are. Depending on the type of trader you are, depends on how much you wait or how much you don't wait to um, to maximize or to increase your risk. For example, if you're a short-term trader and you see a move, the more you wait to enter the move, usually it's when you increase your risk, right? Because think of it like this. It's like a train. The train stopped and everybody's going in, right? And the train starts to move a little bit. And if you hop on the train, your risk is less. However, if the train starts getting momentum and starts going off, faster and faster, if you try to hop on the train, you're going to hurt yourself. You're going to fall. That's what happens when you're not executing at the right time. And this has to do a lot with your entry techniques and exactly what type of setup you're looking for in a specific type of window or in a specific type of market, etc. However, if that is not the case, if you're not second guessing yourself, if you're like, oh, you're just moving, you're seeing the market move and you don't want to execute, that probably has to do with a deeper level of doubt that has to do with probably with self-confidence. And that comes, I've seen that with, everybody has it, but it is a little bit more, it's a little bit more frequent in newer traders that don't actually have the experience on the or the hours behind watching a specific market, years and years, and they don't actually feel how the market could move against them. So those three aspects are the main that I can think of right now when we're talking about FOMO. So first of all, if it's not your trade, if the trade already moved and you were not planning to participate in that specific move, let it go. It was not your trade. Always. And this was thought from another trader many years ago. And I was talking about FOMO, and I was like, bro, he was like, this trade is just running without me, blah, blah, blah. And he was like, listen, realize that the market is always moving in the direction of new opportunities. The market's always there. And man, how many pairs do we have in Forex? I don't know, 20, 30? Even if you have access to all of the 40 some pairs that there are, and probably the combinations of them, right? Even if you're trading just a quarter of them, you're trading like 2 or 3 or 4 pairs, with the number of opportunities that you can have with all these pairs or all these markets that we have access to, it's just mind-boggling. It's like, it doesn't matter, the market's always going to be there. And if you're also thinking long term, FOMOing, it's not even a thing. It's like literally not a thing, unless it's a very unique opportunity that happens every twice a decade or something like that, which is probably not even for us. This specific types of occurrences happen for institutional traders that are trading hundreds of millions of dollars, and they see like very specific things coming on, like with the geopolitical scenarios or geopolitical picture, let's call it that way, and a very specific technical thing and a very specific context thing within all the world economy, and they execute a very specific trade. Those things happen like very rarely, and if they're not executing, it's probably because it was not in their plan. So that would be the first one. And second one, do not resist a move. If you're resisting a move, and that's something I was writing here, right? If you're resisting a move, you're going against your own probabilities. listen, when you're trying to participate in something, you're second guessing yourself and you're like, oh, FOMOing. You just have to wait a little bit. See the prices coming back to your entry or to your closer to your entry point, right? And see if you can participate. I've seen so many trades go when you're like actually jumping the gun and probably because you don't want to experience FOMO later, you're executing ahead of time and before you should, and then you're getting ahead of yourself, and the trade is going against you, and then you're taking heat, meaning that you're in drawdown and you're like freaking out and you don't know what to do, and you close it, and then the trade moves in your direction, right? Well, guess what? Professional traders don't act like that. If they have a very specific method of building a position, for example, they know that the perfect entry usually it's it's not that it doesn't exist. I believe it does. However, the likelihood of us or any trader, even if you're a scalper, a very you know experienced day trader, getting the perfect entry is very unlikely. So you have to be okay with it. Sometimes, if let's say if you want to trade 10 lot position, you want to start building your position so that the whatever entry, the first entry you had is not perfect or is not at the right time. You can have that room of error to start or to keep building your position, and that is another way to bite or to fight FOMO, right? To start participating in something. If you see, and guys, by the way, this is no one is immune to this, right? I also see. I was looking at the markets this morning, and I trade futures, right? And I'm looking. I'm like, this is probably not. This is not going up. This is probably going down. And I was trying to get into the S&Ps, and I was definitely late to the party. I can tell, but I was like, should I just jump in? I'll just wait. So but this also comes with experience, right? So I waited, and then I executed on a better spot, right? Had I not waited for that better spot, I would have taken a lot of heat on the way up to sell short. So those are just a few tips that I can think of, off the top of my head to fight FOMO. Just if it is not your
Yeah.
plan, if it's not your trade, if you want to participate in a move that's already, in a trade that's already moving, or in a market that's already moving, this has to do with another, and this is some other question that I saw, right? How can you participate in a move that's already begun, right? How can you find a better entry or a perfect entry? Again, if it is not your setup, it was not your setup originally, just let it go. However, if you know what you're doing, you can use a top-down analysis approach. And if you're, let's say, looking at a 1-hour chart and the market's moving, you can go down to the 15-minute or 5-minute or 1-minute chart, even 1-minute chart, right? To see if there's inefficiencies in the trade, in the previous move, in which you can get into, right? And this is something that we're going to be talking about in module 4, actually, something that I'm
Okay.
writing on as we speak, and ways in which you're already seeing a move, and then you find where is the most likely spot in which the market could retrace a little bit for you to have a better entry and participate. Sometimes you don't get it, but sometimes if you combine that philosophy or that approach with building a position, then you can participate, and then you kill FOMO 80%, right? So that would be my take and a
Yeah.
short answer.
Yeah, there's a lot of questions actually. You actually covered the second one as well. I don't know which one to choose. Also, chat making me laugh. Emu said that you have a good headline for a trader. So that's probably because JV understand the trading psychology. Me and Ken, we don't. That's why we are boarding probably.
Yeah. No,
So yeah, guys, if you want to avoid it, I would probably start to think about trading psychology really fast.
And it's always there. The point is that it's like a flashlight. When you start analyzing different things or different areas of your trading, you start seeing different things, right? If you're focused only, I'm not saying it's your case, but when people are only focused on specific technical stuff, right, which is usually at the beginning of our career, we just want to understand what's going on in this chart, right, and this little thing that we see in the computer, and we want to understand what's transpiring and what's happening. And then when you kind of have an idea, a few years later, then you start thinking about psychology and mindset and all those other things. But yeah, let's go ahead with the next question.
Okay, so either this is a good one, and I would like to hear the also answer how to accept losses and move on. Either whenever it's drawdown or you lost account, any losses that you will get into throughout your trading journey. And there's a lot of examples, but basically probably the most important part, how to move on.
There is a lesson I wrote in module 1, lesson 6, actually, for those that are interested in participating in the Trading Performance Mastery Program and becoming a member. This lesson is lesson 6, which is called thinking in probabilities. Probably you've heard of the term because Market Douglas made it very popular back in the 90s, like thinking in probabilities, and then you have to think in probabilities, blah, 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 and all those things. So I went really, really deep into when I understood that first from, the mechanical and the technical and the mathematical perspective of probabilities. But then I was not, to be honest with you, Jake, I was not satisfied. Like I understood that if I execute 10 trades and if I hit on 5 and miss on 5 and my risk to reward is plus, it's more than 1, let's say it's 1.2 or 1.5 or 2, whatever, I'm going to make money. If I make this on a whiteboard, I understand it and it just makes sense. Why can't everybody that understand that very simple concept make money? Because the number one thing that I think prevents us from that is just accepting losses, which has to do with also accepting risk, right? And one of the exercises he proposes is, that's an alert on ES. So the market's coming down my way. Good. Sorry, I lost my train of thought. Yes, one of the things is accepting losses has to do with accepting risk, right? And first of all, yes, if you're trading according to your account size, right? And if you're trading, let's say if you're a new trader and you're in the 1 or 2 or 3% arena, right, in which you're dipping your toes into trading and you're in your first 2 years, right? And you're risking 1-2% and you're okay with that. And then all of a sudden you have like a 10% loss, right? And that hits you really hard and, emotionally, you lose confidence. You're like really not feeling yourself. You start doubting your strategy. You start doubting the trades, the markets you trade. You start doubting your executions and everything. And then you go back to do something different. If that is the case, the first thing I would suggest to anyone in that situation is just to wait it out. Wait it out. Why? Because when your emotions, remember this, guys, when your emotions increase, your intelligence goes down. Always remember that. It's like when you're having an argument with your girlfriend or boyfriend, whatever, and she's yelling at you, and then you're getting like more and more and more, uncomfortable and angry. If you say anything, it's going to be the wrong thing, because your thinking is completely hijacked, right? Imagine that, and I was thinking about this the other day. Imagine that a friend, your best friend, talks to you, calls you on the phone, and he says, "Hey, Jake,
can you hear JV? I'm not sure if we can hear you. Let me check the
my microphone's on."
Can you hear JV, guys? Because for some reason I can't hear you, so I don't know if that's me. Yeah, you can. Okay, so that's probably on my side. I'm sorry. Please continue.
Yeah, so let's just keep it simple here. When your emotions hijack, when your emotions are so high, they hijack your intellectual reasoning. So when you're in panic because you're in drawdown, like you're usually, let's say you're usually risking $1,000 per trade, and then in a specific trade things got out of hand because you're over leveraged, or you forgot to put your stop, and then you were, you were distracted or whatever, and then you're like $4,000 down, right? And then you're panicking because this is new to you. You've never experienced this before. Then you need to calm down before doing anything. You need to let your emotions, like the foam of a beer, when you're pouring a beer in your cup, and then the foam goes up. You need to let it calm down to drink it. Same for your emotions. And I know you guys are, it's going to be Thursday, it's going to be Friday, and you're going to be drinking your beer, you're going to think about it. But it's so true. If you let your emotions calm down, then you're going to have a better outlook from whatever you have in your trading, in your position. And this is the case of a drawdown, right? In which you're still in a position that's giving you heat, and you have an unrealized loss, right? If that is the case, go that way. However, if the loss is realized and you already closed the trade and it was a red trade, was a losing trade, and you don't know how to deal with that, if you feel that the emotional hit was too high, you need to stop. If you're taking 10 trades, in a session, and this was your second trade, you need to stop before taking the next trade for, let's say, an hour, right? If you're taking 3 trades per week, and this first trade was really bad for you because you just enter, and you forgot to watch the news calendar, right? And you didn't see that at 8:30 there was a very important high impact news event, and you just put your position, you forgot, and then the market wiped you out and took your stop like in the first 10 minutes, and you're like, what the f did I do, right? And you're like shocked emotionally. You need to let it, you need to cool off. So that would be the first way to accept losses, just to gain perspective and see what's going on. However, if you're experiencing, and I think of something else, if you're experiencing a string of losses, which is a losing streak, right? 1, 2, 3, 4, even 10 trades, right? That you're losing, there's something wrong. And if you've been profitable before, right? There's probably something wrong in one or two things. You're executing low probability setups. You're like literally just gambling and trying to make money for whatever reason, right? Or you're very disciplined, you're executing your setups, but you haven't realized one thing, which is probably the second thing that kills the most traders: market state or market types. You have a system, or you have a strategy, depending on the type of trader you are, that works well in a very specific type of market. But you haven't noticed, or you haven't realized that the state of the market has changed, right? And by the way, there's 4 states of the market. So if your setups, the kinds of setups that you use, or your system works well, and let's say volatile directional markets, right? And the market is now just choppy, which is consolidation sideways, and you're trying to execute your usual trades that work well in directional volatile markets, you're just not doing it right. Think of it's like 85 degrees out there. It's like very, very hot out there, and I go out with a coat and just a scarf and a beanie hat. Like, you're not dressed for the occasion. Like, you need to be wearing shorts and a t-shirt, or the other way around. So when you're executing your trades like outside of the specific market type that you should be doing, you're gonna just hurt yourself, right? So accepting losses have to do with all those things. And by the way, if you if you're not familiar with the way the market or this concept of market states or market types, it's something that we're going to discuss and well, actually going to teach about it in module 4. And it's something that I've seen like very few traders talk about, like the market states. Like I haven't seen like many people really talk about it, and conditions and stuff like that really will blow your mind when you understand it from this perspective and you apply it to your trading. Man, that's going to really help your hit rate, right? Your profitability and the way you approach the markets. Because sometimes the cash position, the not taking a trade is the best decision. Sometimes not. But yeah, I would say that.
Okay, perfect. JV, I probably got all the questions. I took all the screenshots about the questions, and I would love you if you can answer them, but probably on your Instagram. So I'm going to leave in chat your Instagram, and whenever you have time, I'll send you all those questions. You can do a question, and leave it in your stories, guys, if you're interested in JV's work, which I believe you are, because I saw the chats when you were talking. They were kind of enthusiastic about it. So you can follow JV on Instagram, and I'll probably then talk to JV. We can probably cover those questions on his stories. At the same time, JV, would you be open to do some one-on-one sessions with some of the people from the live chat who are participating in our live stream to basically just show, because you are building a program, just to show what are you capable of to help them with their performance. So if you're up to it, or if you're for it, then I'll probably, guys, just create a survey, and I'll include this survey in my story. So whoever from you guys will then complete and submit the survey, I'll go then talk to JV, and we choose few of you who will or who can go one-on-one with JV, which I'm very interested in.
Absolutely. We discussed this questionnaire. It's a very simple. I think it's a 10-question questionnaire. Very simple. It takes a couple of minutes just to answer, just to get you know better before the call and see where we're at. And just think of something that you really want to work on that's hindering your success, or you feel that's holding you back in your trading, and we can turn it around, and then give you a few exercises, just a few simple ideas, so that in the following weeks you can integrate it in your trading. And if you're committed to doing the work, like you can see real results in like not years or months, like in few weeks you're going to see something changing in your trading for good, especially if we work deeper, like in working with your core beliefs and stuff like that. And it's phenomenal. Like for example, I was writing right now module 3 that has to do with integrity and identity, things that have to do with discipline, because module 3 is behave, talks about discipline, and everybody always, especially in social media, is like discipline, you have to be more disciplined trader, think in probabilities, blah blah blah. Let's say that's okay, that's true, but that's just probably 5 or 10% of what real discipline is. Has to do with a lot more things than just be disciplined and sitting on your hands and using your willpower to not take the trade that you should. It's just that's like kindergarten level for actually learning how to be a disciplined trader for real. But yeah, we will have that in the program, and I'll be delighted to help you guys with it, and the people that are willing to jump into a one-on-one with me. It's going to be a quick 15-20 minute call in which we can turn around one of your core beliefs or your trading problems and really help you out there, man.
Looking forward to see the result of it. Okay, perfect. I don't think that we can cover all those questions, because there were at least like additional 20 questions in that. So as I was saying, I'll just probably talk to JV, and he will cover it on his Instagram profile. Just can you remind me, what was your name on Instagram?
Yeah, it's JV. JV __ or JVara __.
J Vora ___. So yeah, guys, those of you who are interested, I hope I did write down the correct one, but JVora ___, you should find him easily. Those of you who are interested in JV's work and the program's going to be amazing, then here's his Instagram. Also, he's going to be entering very common mistakes, challenges, struggles in his Insta stories very soon. So
Yeah.
yeah, that's probably the way we go. All the questions that won't be answered on our live streams, because he will be joining us often, then we will answer them on his Instagram.
Yeah, we're actually working on 3 topics this week and probably the coming week too, which is the 3 things that traders struggle with the most. The 3 most, and this is a big one, the 3 most common mistakes funded traders make after passing challenge, and the 3 best ways to beat FOMO, which we were talking about here just a minute ago. But yeah, we're going to be dabbling with these concepts this week, next week. So if you tune in within our YouTube channel and the Instagram as well, you're going to be getting some gold nuggets in there, man.
Yeah, most definitely agree. Okay, so thank you very much, JV. I think we're good to go. So thank you very much for joining in. I think you brought a lot of value to traders. Always great to hear from someone else than just market analysis charts, because there's not much of it on the YouTube or internet. I mean, not every trader gets some tips from the mental side, I would say, probably every day, which is, at least in my view, as important as the strategy, as the system, as the risk management. So
Right.
yeah. So yeah, thank you so much for coming in.
Absolutely, guys, and I'm really enjoying this part of my career right now, which is sharing with you what I would tell myself 5 years ago, 10 years ago when I was starting, right? And yeah, be looking forward to it, and stay tuned for more, for sure.
Okay, perfect, guys. So we'll see you again on Wednesday. Till that, I wish you best of luck in trading. Tomorrow, I'll let you know about the RBA decision. So if we are looking at the longs on Euro Australian dollar, and we'll see each other on Wednesday. Thanks a lot and good luck.
Phenomenal.
Bye-bye.